U.S. Senate approves $340 billion budget resolution for fiscal year 2025. UK records budget surplus of £15.4 billion sterling in January. And Japan's core consumer inflation accelerates to 3.2% in January. Welcome to the Qnews Economic Bulletin, where we provide for you the latest developments shaping the global economy, from key market trends and financial updates to regional economic highlights and forecasts. We've got essential news and analysis to keep you informed. And we start off with the United States, as the National Association of Realtors has reported that the country's existing home sales fell 4.9% in January, marking a sharper decline than economists had anticipated. The seasonally adjusted annual rate dropped to 4.08 million units, compared to the forecasted 4.12 million units. This decline follows 3 consecutive months of increases and reflects the ongoing challenges posed by high mortgage rates and elevated home prices. Home resales increased 2% year-on-year in January. U.S. consumer sentiment fell sharply in February, reaching its lowest level in 15 months, as concerns over inflation and the economic impact of proposed tariffs weighted on households. The University of Michigan's Consumer Sentiment Index dropped to 64.7, down from January's revised reading of 71.7, and below the preliminary estimate of 67.8. This marks the lowest level since November 2023. Inflation expectations surged, with households anticipating a 4.3% increase in prices over the next year, the highest since November 2023, up from 3.3% in January. Over the next 5 years, expectations rose to 3.5%, the highest since 1995, compared to 3.2% in January. The U.S. Senate has passed a $340 billion fiscal 2025 budget resolution, promoting President Donald Trump's immigration, energy, and defense policies. The bill, passed by a 52-48 vote, marks a significant legislative win for Republicans. It boosts spending by $85 billion annually over 4 years to fund tighter border security, mass deportations, energy deregulation, and increased military spending. This Senate resolution does not include the $4.5 trillion in tax cuts Trump has advocated for, leaving that issue to be addressed later. In Europe, European Union Energy Commissioner Dan Jorgensen has said that the bloc is intensifying efforts to replace Russian gas by increasing imports from countries like the United States and accelerating renewable energy deployment. The EU has committed to phasing out Russian fossil fuels by 2027 in response to Moscow's 2022 invasion of Ukraine. Jorgensen highlighted plans to streamline permit rules to expedite renewable energy projects and secure alternative gas supplies for sectors where electricity cannot yet replace gas. The Office for National Statistics has reported that British retail sales volumes jumped by 1.7% in January, marking the first monthly increase since August and far exceeding economists' expectations of a 0.3% rise. The January surge, the fastest since May 2024, suggests consumers were willing to spend despite a weak economic outlook. Retail sales volumes for the 3 months leading up to January were still down 0.6% compared to the previous 3 months, reflecting the lingering weakness from late 2024. On a year-on-year basis, January sales were up by 1%, surpassing the forecasted 0.6% growth. Official figures have revealed that Britain's government recorded a budget surplus of £15.4 billion in January. January typically sees a surplus in Britain's public finances as annual income tax bills for the previous financial year are due. However, income tax and capital gains tax revenues were below expectations, contributing to the lower-than-expected surplus. The figures increase pressure on Financial Minister Rachel Reeves, who risks missing her debt reduction targets. Economists warn she may struggle to balance day-to-day spending and tax revenues by 2029-30, with only £9.9 billion sterling of headroom from her first budget last year. Official statistics agency ISTAT has reported that Italian EU harmonised consumer prices fell by 0.8% month-on-month in January and increased by 1.7% year-on-year. This represents partially revised down preliminary estimates, which had pointed to a 0.7% monthly decline and a 1.7% annual increase. The annual inflation rate of 1.7% in January marked an uptick from December's 1.4%. Meanwhile, Italy's main domestic price index showed a 0.6% monthly increase and a 1.5% annual rise, accelerating from December's 1.3% annual growth. Core inflation, which excludes fresh food and energy, remained steady at 1.8% year-on-year in January. Reuters has reported that Russia is open to using $300 billion in frozen sovereign assets for Ukraine's reconstruction as part of a potential peace deal, but insists a portion be allocated to areas under Russian control. The proposal comes amid early-stage discussions between Russia and the United States, following their first face-to-face talks on February 18th in Saudi Arabia. The frozen assets, primarily held in European securities, were blocked after the 2022 Russia-Ukraine conflict. Moscow may agree to allocate up to two-thirds of the reserves for rebuilding Ukraine, provided there are accountability guarantees, while the remainder could be directed to Russian-controlled territories. Going to Asia now, and official data has reported that Japan's core consumer inflation accelerated to 3.2% in January, marking its fastest pace in 19 months. The figure, which excludes fresh food prices, slightly exceeded market forecasts of 3.1% and reinforced expectations that the Bank of Japan will continue raising interest rates from historically low levels. A separate index, which excludes both fresh food and energy costs, a key gauge of demand-driven inflation for the Bank of Japan, rose 2.5% year-on-year in January, the fastest pace since March 24. The Bank of Japan Governor Kazuo Ueda has announced that the central bank is prepared to ramp up government bond purchases if long-term interest rates rise sharply. This comes as yields recently hit their highest levels in around 15 years. Ueda emphasized that while the Bank of Japan allows market forces to influence long-term rates, it will act swiftly to stabilize markets in cases of abnormal movements. He also noted that the bank could consider further interest rate hikes if inflation continues to improve, though underlying inflation remains below the 2% target. Statistics Canada has reported that the country's retail sales jumped 2.5% in December, surpassing analysts' forecast of a 1.6% increase. The rise was driven by a sales tax holiday and strong spending on food, beverages and vehicles. This marked the strongest monthly growth in nearly 2 years, with total sales reaching 69.59 billion Canadian dollars. Retail sales, a key indicator of gross domestic product growth, contributed to a 2.4% increase in Q4 2024, marking the second consecutive quarterly rise. Russian President Vladimir Putin announced that Russia has the capabilities to mine its own lithium and emphasized the need to accelerate domestic production. During a conference on advanced technologies in Moscow, President Vladimir Putin remarked that Russia currently does not mine lithium, but emphasized the country's capability to do so, suggesting that it could have started this process 10 or 15 years ago. He highlighted the strategic importance of lithium mining for Russia's development and import substitution efforts. Oil prices fell 2% on Friday, but were still on track for a weekly gain on supply disruptions in Russia, while uncertainty loomed over a potential peace deal in Ukraine. Brent futures fell 1.9% to $75.06 a barrel, while U.S. West Texas Intermediate crude fell 2% to $71.02. Both benchmarks are set to gain 0.4% this week. Brent would be marking a second week of gains after 3 weeks of declines. West Texas Intermediate is set for its first week of gains after 4 weekly declines. Gold prices eased on Friday as investors booked profits from the previous session's record high, but were set for an 8th straight weekly gain. Driven by strong safe haven demand amid concerns over U.S. President Donald Trump's tariff plans, spot gold shed 0.3% to $2,930.85 an ounce. Bullion has gained around 1.7% this week after rising to a record $2,954.69 on Thursday. Meanwhile, U.S. gold futures fell 0.4% to $2,945.20. The Monetary Policy Committee of the Central Bank of Egypt has decided to hold interest rates steady for the 7th consecutive time during its first meeting of 2025. The committee maintained the overnight deposit rate of 27.25%, the overnight lending rate at 28.25%, and the main operation rate at 27.75%. The discount rate was also kept unchanged at 27.75%. It noted that the decision reflects the central bank's cautious approach as it balances domestic economic recovery with persistent inflation risks and global uncertainties. The Riyadh summit has taken place, bringing together leaders from the Gulf Cooperation Council, the Jordanian monarch, and the Egyptian president, following an invitation by Saudi Crown Prince Mohammed bin Salman. The summit aims to discuss the future of the Gaza Strip and address plans aimed at displacing Palestinians. This meeting comes as part of Arab efforts to reinforce a unified stance regarding the crisis in the region, ahead of the emergency Arab summit to be held in Egypt. According to media reports, the proposed Egyptian plan for the reconstruction of Gaza includes 3 phases over 5 years, without any displacement of the Strip's residents.
As regional leaders gather in Riyadh, the economic reality of Gaza's reconstruction is coming into focus. A joint assessment by the United Nations, European Union, and World Bank estimates the cost at over $50 billion, with $20 billion needed in the first 3 years alone. The destruction is extensive. Housing accounts for 53% of total damage, while trade, industry, and infrastructure make up another 35%. Managing 41 to 47 million tons of debris is expected to add further financial strain. The economic impact extends beyond physical damage. Gaza's economy has suffered $19 billion in lost productivity and revenue, with key sectors like health, education, and commerce facing prolonged disruption. Reconstruction plans propose temporary housing and phased rebuilding, but questions remain over who will finance the recovery. Gulf states have been urged to take the lead, yet concerns persist over investing in a region vulnerable to further destruction. Egypt's plan suggests a gradual redevelopment approach. Funding remains uncertain. With an emergency Arab summit set for March 4th in Egypt, today's Riyadh talks could lay the groundwork for a financial roadmap. Yet without firm commitments, Gaza's economic future remains in question.
Now, joining us from Paris is the director of the Farragut Square Forum in Washington and former advisor to the World Bank, Mr. Meher Nicolas Ferzli, to discuss the latest developments in Gaza and its reconstruction. Thanks for being here on Qnews' Economic Bulletin with us. So the UN, the EU, and the World Bank estimate Gaza's reconstruction costs at around $50 billion. How realistic is that figure, and do you think it's likely to rise further?
I'm delighted to join you today, and starting with a short disclaimer, everything I say today is a reflection of my personal opinion and assessment. The name of that report, which I think was published 3 days ago, the official name is very long. I think it's called the Interim Rapid Damage and Needs Assessment. And it was compiled, as the name indicates, rapidly, which means quickly, by 3 agents, the UN, the European Union, and the World Bank, right? And so these are rough metrics. But to make a long story short, they're saying what? They're saying over 10 years, which is a fairly long period of time, they'll need $15 billion to rebuild or repair buildings and housing. That's a big block. And there's a $19 billion, a little more, $19 billion block of money needed to make up for social and economic losses, including health, education, and commerce. What does it mean? Basically, it's the opportunity cost, is the fact that things now have been destroyed in Gaza. So production, welfare, blah, 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 which should have been there, is atomized, destroyed. So we need to make up for that, the lost opportunity cost. That's $19 billion. And there's another block, also of $19 billion, which is to rebuild big infrastructure. What does it mean? Energy, transportation, highways, roads, and ports and airports. So all of that is $53 billion. It's a figure. To be honest with you, no one knows for sure. So they came up with a rough ball game figure, and they're saying that a big third of that money, more than a third, will be deployed or used in the first 3 years, right? Why not? It sounds reasonable. My personal opinion is that these figures are fairly optimistic, and I think in reality it may cost a bit more. So in reality, I think we're looking at least 80, 90 billion dollars. So perhaps, the World Bank wanted to be conservative. Perhaps they didn't want to frighten potential donors because, of course, the money is not going to come from Israel, who did all the destruction. It is not going to come either from the US. I think people are expecting that most of the money will be forked by European and British taxpayers, as well as wealthy Arab Gulf states, right? So they're expecting Europe and the Arabian Gulf to pay for the damage, the destruction, which happened in the Gaza Strip. So maybe they came up with a nice, smaller figure than what I think the real metric will be over time.
Okay, coming on to the Riyadh summit, which has just, of course, taken place. How does that pave the way for the Emergency Arab Summit, which is coming up in Egypt?
I think it's mostly symbolic. It's great that it happened in Riyadh because, after all, theatrics plays a part in political and geopolitical symbolism. So it's happening on the heels of another more important summit, in my opinion, held 4 days ago between Marco Rubio, representing the US, and Sergei Lavrov, representing Russia. And we know that on the menu in Riyadh 4 days ago, when America and Russia discussed various issues for a full day, they did not speak only about Ukraine and Eastern Europe. So probably the Russians and the Americans already, when they were in Riyadh, they discussed a little bit the Gaza-Israel issue. Of course, today, the Pan-Arab Summit today in Riyadh was devoted solely on Gaza. Of course, there is no communique because today's meeting in Riyadh was under closed door. And so there's no communique. There's just a few signals, minor signals, sent by advisors or academics in Riyadh, Doha, Cairo. But the real thing is the Cairo summit. To make a long story short, I think what the Arabs are messaging to America and Israel, they are messaging the fact that they are united, because of course there's that old, Qatari, Saudi Arabian rivalry, and Qatar, attended the meeting and was greeted, warmly by the Saudis. So showing up a united Arab front, because of course, behind the unity, there is the fact that in the Gaza Strip and the West Banks, and on the one hand, you have the interests of Qatar, Turkey, and Iran, and on the other hand, you have the interest of the Arabian Gulf, excluding Qatar, and on the other hand, you have Israel's interests, right? So not all's interests are perfectly aligned, but at least today, there was a pan-Arab show of unity in the face of Trump's Gaza Strip, casino and gambling project. So the Gaza Riviera. So because they're not happy about the idea of the Gaza Riviera, but there's another factor. The Arabs are not happy about the idea of transferring 1 million or 2 million Palestinians, even if it's temporary, right? Even if it's only for 1 year or 2 years, transferring them to Jordan and Egypt is a big no-no for the Arabs, right? And they are united on that. They couldn't care less about Trump's dream of casinos and Riviera, but it's the idea that to build a deluxe, huge series of resorts stretching over that 50 or 40 kilometers of land, you need to expel most of the population first. I think that's unacceptable for the Arabs because, of course, the Arabs view the things differently. They have in their mind two big traumas, the 67 and 48 traumas, where many Arab civilians were expelled brutally by Israel. And I think the idea that now a third expulsion would happen is really something that goes against Arab public opinion, against the ideas of...
Okay. Okay, I'm going to have to cut you off there, unfortunately, because we're out of time. But we look forward to the next UN, World Bank, EU communique with an incredibly long name. Thank you very much for joining us here on Qnews, Mr. Mayor Nicolas Fursley. Thank you very much. Moving to the stock markets now, and global shares displayed mixed performance, with US markets experiencing a decline while Asia saw a surge. Futures for the S&P 500 declined 0.58%, and those for the Dow Jones Industrial Average lost 0.86%. In Europe, France's CAC 40 was up 0.29%, while Germany's DAX decreased 0.24%, and Britain's FTSE 100 inched down 0.05%. In Asia, Hong Kong's Hang Seng Index hiked 3.99%, the Shanghai Composite rose 0.85%, and the Nikkei 225 increased 0.26%. Well, let's get a recap of the main economic headlines this evening. The US Senate approves $340 billion budget resolution for fiscal year 2025. UK records budget surplus of £15.4 billion sterling in January. And also in January, Japan's core consumer inflation accelerates to 3.2%. That's all for our economic bulletin today, but don't forget you can follow us on our social media platforms at Qnews EGY to stay informed. Thanks for watching and stay tuned for more here on Qnews.